Meta just reported fantastic first quarter 2024 results, 27% revenue growth, operating margins jumped over 90%, earnings per share up over 100%. These are fantastic results that any investor would want to see. And yet the stock sold off. What is going on? Sometime today, it's down around 10, 11%. What's going on with the stock? Well, management even acknowledges this, saying, look, we've historically seen a lot of volatility in our stock during this phase of our product playbook. And they're talking about investing in scaling a new product, particularly Meta.ai or their AI solutions. We'll talk more about that in just a second, where they're investing heavily in the capital expenditures required for this AI and the energy expenses for it, but they're not yet monetizing it. And they talk about how this is Zuckerberg, how they've seen it with Reels, Stories, the news feed transition to mobile several times where they were making the investment ahead of them actually monetizing this. And this creates volatility for the stock. So management has seen this playbook before, and they're talking about a multi-year investment cycle before we fully scaled Meta AI and really make AI a profitable business. And I can understand why Wall Street would freak out, because they're looking at Zuckerberg investing literally $10 billion to build an AI model. In this case, I believe it's Llama 3, and then making it open source. So we're saying, wow, you just spent billions and billions of dollars, and then like, boop, here it is, open source. And folks, Wall Street's saying, well, wait a second, how are you going to monetize from this? Most people don't have the money, let alone the chutzpah to be like, yeah, here's $10 billion and poof, I'm going to make a model, make it open source. I mean, that is really incredible to think about that. But Wall Street's saying, well, how are you going to profit from this? How are you going to monetize this? And you can check out Meta.ai right now in terms of the functionality. They're trying to make it comparable to ChatGPT 4, the most cutting edge model. You could argue Claude 3 is the most cutting edge. So there's an AI race here, folks. And what Zuckerberg's saying is that, hey, I've got an advantage because I've got this beautiful free cash flowing advertising business, and I can casually invest tens of billions of dollars to create compelling AI models. So he clearly is a contender to create the best models, the best AI models out there. And he recognizes that this will be a huge opportunity. There's a lot of potential ways to monetize this AI. There's a massive business here, including scaling business messaging. So talking about inserting AI to talk with business, like maybe as a customer support or, from a sales perspective, introducing ads or paid content into AI interactions and enabling people to pay to use bigger AI models, similar to what you've seen with OpenAI, and access more compute. So AI is already helping. So there's a lot of opportunities to monetize it, but they're already using AI behind the scenes to help improve user engagement with the app, naturally leading to more ads, better, efficiency with their ads, more revenue. So they view AI as just a huge opportunity for them, but it also is a huge risk. There are a lot of challenges for it, and you are starting to see arguably the experience across the various different social media platforms degraded slightly. Truthfully, I don't know to the extent that this is happening because I just don't use these platforms, the social media platforms. But if you're a regular user on like Facebook and Instagram, I'm curious to hear if you've seen a significant degradation in terms of the quality. I think you've seen similar aspects when, Musk bought Twitter, where you're sort of like, okay, the platform's clearly changing. But in some cases, people are now saying you're seeing advertisements for explicit AI girlfriends, and it's how it's swarming Facebook and Instagram. So this is a real risk that users could start walking away from the platforms if they start finding that it's just lacking the authenticity that it historically had. That said, you're not seeing that in the numbers. You are seeing continued growth. This is the heart and soul of Meta, showing that 3.2 billion people are still using various different Meta products. That is just incredible to me. You've got effectively like half the world using Meta products. I mean, this is a behemoth. So why is the stock down? I think it's a combination of management saying we're going to up our investment, which they talk about from 30 to 37 billion. Now it's 35 to 40 billion. I think that's actually just fairly minor relative to management talking about, hey, our growth or our revenue expectations for the second quarter, 36.5 billion to 39 billion. So effectively saying high teens to low 20s% revenue growth versus 27% growth in the first quarter. So they are expecting a deceleration. I think that could surprise investors. So I think it's a combination of higher expenses, this sort of ballsy AI investment, combined with a deceleration in revenue. And I remind and warn investors, it is worth remembering, this is still, while AI is a huge potential for them and it's helping their advertising business behind the scenes, it is still very much an advertising business. So if there is a recession someday, so far that hasn't happened largely because of incredible fiscal deficit spending. Arguably, I'll make a whole separate video about this, but arguably, we're in a very challenging position because like GDP growth was recently reported at 1.5, yet US deficit spending is, 5-6%. So, you're talking about just absolutely not sustainable type of growth here and type of financials. But going back to Meta, this is the reason why I think the stock came under pressure. Plus, I think you probably have some people looking to lock in some gains, given the stock has done very well in the last year or so. So where does Meta go from here? First, quick plug, this is not financial advice. Also, recently, a premium member of the Unrivaled investing community shared the following. This is a direct quote. "I got introduced to the markets as a speculator during the 2020-2021 bubble. Your content really helped me understand long-term investing. Most of the online friends I made during the bubble are still speculating. I'm trying to convince them to join your membership. The unrealized profits from," and he mentions 2 different companies I've called out, "is enough to cover 302 years of membership. So for compelling ideas, check out unrivaledinvesting.com. I also have educational materials if you're interested in learning how to value stocks or read financial statements. This is the information I wanted to know and that I ultimately learned by working on Wall Street, working in a multi-billion-dollar hedge fund, as well as on the sell side before that. So based on my own Wall Street experience, made those courses for those looking to learn." When I think about the quality of Meta, and whenever you're thinking about, where I'm trying to leverage AI as well to analyze stocks, whenever you're using AI to think about a business, well, you can always look at business from 2 different angles. One is what's the potential return in the years ahead. And I've talked about how we've built out this feature called AI Predict that provides a range for how, a stock can perform over time. We've also now launched a product called Scorecard. This is all within AI Ticker Chat that provides a qualitative assessment of a business. So now you have the quantitative and now the qualitative assessment of a business. And Meta overall scores very high, 8 out of 10. And, it's 8s and 9s across the board where, alignment, 9 out of 10, financial health, 8 out of 10, company viability, 8 out of 10. I mean, most of these scores are just extremely high, relative to, what you can see for some businesses. So I look at this and think, the quality is there. Meta has an extremely high caliber business model. I mean, this is arguably one of the best businesses out there. When you can post this type of growth, this type of free cash flow, there's just a lot that's going very favorably. So you can actually dig into each of these different angles, whether or not it's analyst sentiment, or capital allocation. You can click on each of those to dive into it. And that's at AI Ticker Chat. First month is free. See the link below. Thinking about Meta, I mean, there's a lot working here. Not only did they post fantastic results, yes, their outlook for the next quarter is a little softer than folks expected, but look, TikTok's supposed to go away in the next year unless it gets sold. I mean, that could be a huge win for them. I mean, creating pressure there at the very least. So you've seen that legislative change. This is actually something I've been calling out for at least the last year or so about how this has been a real risk for TikTok that they could get banned, and ultimately I'm glad to see it actually happening. And I view Meta as a disruptor. I view them like looking at what they're doing. There's so many different pieces. I mean, at the one angle, one end you have Zuckerberg talking about how the Meta Ray-Bans glasses, these aren't them, but he talks about how in some cases they're sold out. People really like them. Another instance, they're playing with the Reality Labs, their AR, VR solutions, recognizing that it's not selling as fast as he likes. So he's making it, opening up the operating system so that way outside third-party hardware makers can leverage the Meta Quest, operating system and build more and more cool devices. So I just view Zuckerberg as just this extremely disruptive force out there. And all in looking at Meta, looking at their business, they break their operating profits into two different segments: family of ops, or family of apps, which is just a huge cash cow. Let's say around $60 billion after tax from just the family of apps. So around 19 times earnings. Now that excludes the very real losses in Reality Labs, which is just mind blowing that, they're burning $3 to $4 billion per quarter in Reality Labs, but Zuckerberg has a vision. So that said, I mean, this is intriguing to me, to see a company that's trading at a below market multiple, growing faster than the market with better economics, arguably just a behemoth. And so when I think about the valuation framework, around 440 stock price, $1.1 trillion market cap, once again, not crazy expensive if you're just looking at the family of apps, giving zero value to their Reality Labs. I mean, so trading around, let's say 20 times, 19, 20 times earnings for family of apps, and assuming, some sort of growth rate in the years ahead, 5 to 15%, potentially penciling out up to, let's say, 100% plus upside over the next 5 years. And it's easy to see that sort of situation play out, but it would require a lot of execution, continued strong growth, continued very strong margins in this segment to really get that result. So overall, as I look at this sell-off in Meta, if you were to say, Daniel, you have to make a choice between selling and buying Meta, I would probably be inclined to say, hey, if I had to choose between the two, I would be inclined to buy Meta on this weakness because they're still posting strong results. They're clearly taking market share, quality across the board, which I called out with AI Ticker Chat, where you can, dive into each of these different elements, not trading at a premium valuation, trading below market valuation, starting to return more and more cash to shareholders via their dividend, which they announced last year. So, I look at this and incrementally, these are making the right steps. So for Wall Street to potentially freak out, let's say, over slower growth and the investments in AI, well, I think the investments in AI, this just fits who Zuckerberg is. He's just constantly experimenting, making big and bold bets. Let's see if he lands it, in terms of getting that revolutionary AI. Clearly, he's very competitive with OpenAI where they are. And so it's very curious to see, could they build an AI offering that, let's say, becomes a new huge income generator for them that's independent of advertising? I would say if that happens, if you could start to see that AI revenue become a real business that's, not directly tied to advertising, something else there, I'd argue, in my opinion, that would make Meta a much more valuable company, because right now you're dependent on the advertising industry and constantly adapting to it and the changes and the marketing budgets and what happens if there's a recession. So you have that dynamic. If you are able to create a AI that everyone starts to use because it's open source and you figure out clever licensing agreements and it gets built into all these things where you effectively get a cut based on the usage in some cases, which Zuckerberg actually talked about, that it's open source, but if you're a heavy user, you need to pay us a licensing. It's a very interesting dynamic. If he successfully makes that evolution, I would think similar to the Amazon evolution, going from retailer to, whoa, you've got this AWS powerhouse, that could be worth even more. You could have that dynamic that it should get a premium valuation to the market, significant premium, if they successfully land that radical AI bet. It's very exciting to watch. I'd love to read your comments below. This is my first video back from spring break, so thanks for dealing with my pause here, and thanks for tuning in to Unrivaled Investing.